Okay, I will begin. Once again, thank you all for joining us for our Food, Bev, and Ag focused webinar, followed by our Food, Bev, and Ag focused Deal Connect event. We're excited to have you all here with us and excited to get into this discussion. I'm going to try and move through our intros fairly quickly on the Opus side so we can get to the discussion at hand. So, Opus Connect, who are we? Who am I? For those of you who I have not yet met, my name is Lena Dobrier. I'm the Director of Operations at Opus Connect. We are a lower middle and middle market M&A focused organization. We're membership based. Our members primarily consist of private equity firms, investment bankers, independent sponsors, family office, etc. We're doing a ton of events, a few new formats that we're excited about. Fireside chats, Deal Connect, of course, our bread and butter, Opus Mind, Lunch for Six. If you want to learn a bit more about us, what we do, how we can help, please reach out to my colleague, Jacob Zeffrin. He'd be happy to answer any questions you may have. Today, we will be taking Q&A. Rick Jordan, our moderator, will monitor that, and we'll try to get to as many as possible. So as questions come to mind, feel free to submit them in that little Q&A bubble at the bottom of your screen. Please do not use the chat function. Use the Q&A, that's what we'll be monitoring. And once again, we'll try to get to as many as possible. I'd like to give each of our sponsors an opportunity to say a few words. These events would not be possible without them. So we'll shift to the next slide here. And I do have the incorrect contact for Alliant on this slide. I do apologize, but I'm going to introduce Fran from Alliant and let her say a few words about herself and her firm. Fran, please introduce yourself. You there? You're muted.
Can you hear me now?
There you are, yes.
Thank you. Apologies. Alliant is among the fastest growing insurance brokerage firms in the industry. We are the largest specialty broker in the US. Our agribusiness team is a national platform comprised of approximately 100 employees. We serve 900 plus clients and generate 400 million in premium volume. We serve not only food processors, growers, packers, shippers, poultry, but dairy ranches, farm labor contractors, as well as farm supply dealers. So with that, I'll wrap it up and look forward to speaking with everyone later today. Thank you.
Fran, thank you. And apologies that we had the incorrect contact. I have Fran's contact if you'd like to get in touch with her. We did hear a bit of background noise. It might have been hard to hear. So if you need any clarification, happy to pass Fran's info along. Do we have Paul King in the room today? Yes, we do. Paul, would you like to go ahead and introduce yourself and your firm, please?
Yeah, good morning, everyone. Looking forward to meeting some of you later one-on-one. Bank Leumi is a full-service boutique relationship bank across the U.S. We have offices in New York, Chicago, Miami, and LA. We've been in the U.S. a good 70 years now. Strictly a commercial bank that provides customized financial services to the middle market. We're committed to supporting our clients through the ups and downs and the vagaries of the business cycle and anything else that's thrown at it, like COVID, for example. And across the bank, we have a deep expertise in the food, bev, and ag space. And so we like this space clearly, and we have a lot of clients in our portfolio. So hopefully today, I'll be learning something new, which I'm sure I will. And I'm looking forward to, again, speaking with some of you one-on-one later today. Thank you for your time.
Thank you, Paul. Sapient Investigations, David Kogan. Please go ahead and introduce yourself and your firm, please.
Good morning. My name is David Kogan. I'm the Managing Director of Sapient Investigations. We're an international corporate intelligence firm. We really specialize in human intelligence around deals. We do background checks on executives, management teams, joint venture partners, anyone you can really think of. And we also have a very robust business dispute practice. So if kind of in the due diligence side and also when things go wrong, we're here to help. So it's always great to be at Opus Connect, and thanks for having us.
Thank you, David. Do we have Steve Brady in the room of Witham? Anyone from Witham, raise your hand. Okay, we'll move on with them. Thank you for your support. Polsinelli, I'm going to wait until we introduce Rick Jordan. He's our moderator today of Polsinelli, and he'll give you a much fuller background once we get to him. But before we do, we have a couple poll questions that we'd like to ask of you. So first, this will help us. Okay, I apologize. Please forgive me. We're going to scroll back one slide. Matthew Barrett, I apologize. Please introduce yourself with one more slide. Thank you.
No problem at all, Lena. Just thought I'd interject before you moved on. My name's Matthew Barrett. I'm a business development executive at Witham. We're very happy to be sponsoring our 8th Opus Connect event. I know I'm in the process of setting up meetings with several of you, but I'll give you some general information. We're a top 20 accounting firm with offices in Boston, New York City, New Jersey, Philadelphia, DC, Orlando, and California. We're here today to represent our transaction advisory practice. Steve Brady will be presenting today during the break at 3 p.m., who leads our transaction advisory team. Looking forward to connecting with you guys after the conference. Thank you, Lena.
Thank you so much, Matt. Apologies. I'm glad we could get you in there. Okay, before we get to the good stuff, quick poll questions. Please submit your responses. We'll give it 20 seconds. Don't be shy. Who are you? Independent sponsor, investment banker, capital provider on the debt or equity side? Let us know, and we'll move on fairly quickly. Give it about 5 more seconds here. Great, thank you. So 16% independent sponsor, 54% investment bankers. You all are dominating today. Capital provider on the debt side, 8%, 14% on the equity side, and 5% of our sponsors, and a couple others. Thank you for participating in that. I do have the next question ready to go, and it's around in-person events. When are you comfortable attending? Now? Not until you get the vaccine, never. You like the virtual format, you're hanging out at home and taking meetings from there. Let us know. 10 seconds and we'll move to the next. So no big surprise, but 21% are good to go now. 73% not until you get the vaccine, and 6% are good just where you are. That's helpful for us to know at Opus Connect. So thank you for your participation. I'm going to launch the third question. And we want to know from you, are there pesticides in organic food? Yes or no? What's the consensus? Do we know? Okay. So 57% of you say yes, and 43% say no. Interesting. I think our panel is going to dissect that in a moment. And our final question we'd like to ask of you is, what food, bev, and ag industry trend most surprised you in 2020 that you think will continue into 2021 and beyond? And we've put here 4 options for the multiple choice: sustainability, convenience, better for you, or food service cleanliness. Let us know. Okay. So 41% are going with sustainability, 38% with convenience, 14% better for you, and 7% food service cleanliness. Perhaps that's because many are not going out to eat anymore. Who knows? Thank you very much for participating in that poll. And without further ado, I'm going to shift to the next slide here and introduce today's moderator, Rick Jordan of Polsinelli. Rick, the floor is yours.
Great, thanks, Lena. Well, I'm really thrilled to be here and joined by just an awesome panel. I'm Rick Jordan. I think this is, as somebody said, is their 8th Opus event. I might be double that, I'm not sure, but have a long history with Opus, great friends, and it's just been a really rich environment for both staying current and just learning about and getting connected in the space. Polsinelli is a full service law firm. You might have seen us in other sectors, maybe healthcare. I co-chair our national venture capital emerging growth practice. And within that practice, we've got sort of 3 vertical focuses, one of which obviously is traditional tech, but we are seeing an increasing amount of sort of consumer food bev deals, primarily in the middle of the country, funded by coastal funds. And that for us is an increasing focus. And for me personally is 60-70% of my current practice. So it's really hot for us. It's exciting, and it's a lot of fun, and I think aligns with lifestyle. So I'm really thrilled to be participating in this in this industry event. I thought it'd be helpful to have each of the panelists introduce himself or herself. It's always better to hear from them. So I thought we might start with Adam Bergman from EcoTech Capital. Adam, the floor is yours.
Thanks, Rick, and I appreciate the opportunity to be here with the rest of the panelists. So I'm Adam Bergman. I'm Managing Director of EcoTech Capital, which is a boutique investment bank at the intersection of tech innovation and climate change. I've been an investment banker almost 25 years now, and almost my whole career is focused on growth. I started doing healthcare internet in the late 90s, tech and internet in the early 2000s, and in 2004 fell into something that started out as solar and grew to renewable energy, and over the last 15 plus years has grown into sustainability. I came to food and ag tech about 5-6 years ago, and really it was at the changes that were happening and the driving of sustainability into the food and ag sector. And over that time, what I've done is really focused on how you build out an ecosystem connecting food and ag tech companies with established food and ag players, as well as investors, CPG and big ag to bring change innovation throughout this area. From my perspective, I'm involved in all areas. I spend about half my time with early and growth stage companies, about a quarter of my time with investors, and a quarter of my time with large established players. And I get a pretty good sense of what's happening throughout the industry. I sit on the technology advisory board of Western Growers, who's the largest player in the West Coast in terms of fresh produce. I'm on the technology advisor for Landis, which is a co-op in Iowa. I also sit on the tech advisory board for the Danforth Plant Science Center. And I had built Wells Fargo's ag tech incubator at the Danforth Center some years ago. And I'm on the advisory board of an organization called See Ahead, which is an incubator focused on the ocean. So I see the sector from many areas. And as I tell people, I didn't come to it from a food and ag background. I came to it from a tech and sustainability. So for me, I'm always looking at how sustainability and tech innovation are going to be impacting the food and ag sector. Is kind of my focus.
Thanks, Adam. Melanie?
Thanks, Jordan. So my name is Melanie Santos Grant. I'm the founder and managing partner of Second Gen Partners. We're a woman-led independent sponsor focused on agribusiness, consumer wellness, and healthcare services. So my background comes from finance, operations, and retail consumer services. And like Adam, I really wasn't focused on this sector until recently. And it's really because for the last, I'd say 15 years, I've really been looking at ESG as it's been influencing the investment sector. And when I was active in the National Association of Corporate Directors, we had a number of initiatives under sustainability, corporate governance, and sustainable growth. And so when I looked at my philanthropic work and some things that really helped me focus on my mission, we decided to launch this firm to focus on agribusiness in particular, where there's some inefficiencies in distribution of technology and consumer wellness. And that kind of falls right into where food and beverage has been going, given sustainability initiatives at large corporations like PepsiCo.
Thanks, Melanie. Alex, and I'm gonna try to say the name and see if I don't butcher it. Malamatinas. Did I get it right?
Yeah, that's great. Thanks, Rick. I appreciate it. And hi, everyone. I'm Alex. And thanks to Opus for having me here on the virtual panel. I manage Melitas Ventures. We're a New York-based VC fund that invests in innovative early-stage food and beverage companies through the value chain. Our core focus is investing in better-for-you branded products, which often have a digital component, including direct-to-consumer or proprietary text messaging platforms, as an example. We've led some of the rounds for some of the fastest growing companies in the early stage space, such as Magic Spoon, Mudwater, Kineuforex, and Verb Energy. I began my career at Morgan Stanley, then worked as a consumer investor at a Tiger and then a Soros hedge fund in New York before launching our first fund 3 years ago, really to focus on where much of the innovation is happening in the food and beverage industry in the early stage. Our team includes a group of experienced investors and operators, including the former global CEO of Burger King, Smirnoff, and one of the senior former directors from Kind Snacks. And our advisors include a digital marketing expert from Google and a certified gastroenterologist from NYU.
Great. Thanks, Alex. Pass it off to Chad Spaulding.
Thanks, Rick. So Chad Spaulding, I'm a managing director, and I head up the originations at CapitalSpring. CapitalSpring, for those of you not familiar, is a dedicated restaurant and food service investment fund. So it's all we do, focused on those two industries with a core on the restaurant side. We've built the fund up now to about just under $2 billion under management. All focused on the restaurant and food service sector. So we've got about 3,000 restaurants in the portfolio. We're operating in every major DMA in the country today. We have a big kind of an ops team. We've logged best practices across the industry in all segments. We've got portfolio pricing for about 500 different service providers, or at least we've interviewed that many. We kind of understand what's best for what types of companies and what types of geographies. We really consider ourselves a big restaurant company and experts in the space. As we've built the portfolio to the scale it is today, across kind of the US, Mexico, and Canada, we've now started to focus in on, the supply chain and service providers, focusing on the significant portfolio synergies that probably exist there. And we're making investments, across what we call the restaurant ecosystem. So that's, everything from route businesses and service providers to, technology companies that help restaurants perform better or better cater to the consumer environment. So I started my career at Goldman, came out of that, helped initiate one of the primary investment banks to the multi-unit branded restaurants. Was asked to open up the West Coast for CapitalSpring about 9 years ago, and have been here ever since. So looking forward to this panel. It's great to be kind of in a little bit broader discussion, as all of these things obviously roll up to our focus on the food service side and significantly impact us. So I'm really happy to be here with the rest of this panel today.
Great, thank. Well, the panel today is going to be focused on the continued implications of the pandemic, changing consumer preferences, and what the Biden administration means as we kind of move beyond a historical year into the 2021, which might also be historical based on the first couple of months, but excited to hear from the panel on all of that. So given that we've got an audience mostly of investment bankers who think that sustainability, based on the poll, was maybe a trend that will continue. Why don't we start with Adam, who's got a enhanced focus on that sort of intersection of sustainability and food. Adam, what are you seeing coming out of the pandemic for 2021?
Well, it's really interesting. I tell people that over the last couple of years, what I've really noticed is an increasing change in kind of the consumer side. And again, for me, the consumer is in charge, and they're driving this change. There's no doubt about it at all. We lived in a society where a decade ago, you'd go to the grocery store, and if they didn't have what you need, maybe there was a specialty shop you'd go to, and if that wasn't there, you kind of had to take what was given. And the whole world to me is now changed. You go to the grocery store, they don't have what they want. There's a specialty grocery store, or there's the internet, and now most people are just starting on the internet. So we're just seeing a very big change coming to what is driving everything today. And I like to talk about, in my view, the world is going towards a consumer who wants fresher, healthier, more nutritious food that is more environmentally sustainable, tastier, and you can trace its origin. I think that's kind of like the holy grail of where we're heading to. And a lot of those trends are accelerating. I also think one of the things that COVID's really doing is driving a lot of adoption of technology. And I see this on both sides, both the food side and really because of some of the changes on food service, but really the ag side. And a lot of what we saw in COVID was that while the supply chain did not break, it clearly bent in ways that scared a lot of people and brought a lot of people to think, okay, what can change? What needs to change to ensure that we have food in the future? There were a lot of real concerns and I sit in San Francisco, and we got to a point where we didn't have at our local supermarket fruit or vegetable. And it happens, as I said, I was on the technology advisory board for Western growers, where the produce comes from 90 miles away. So I was interested. So I called one of my contacts down there and I said, "You guys having trouble?" He said, "No, because we've got more than enough food. We've got a lot wasting in the field." And he did some digging and I did some digging. We found out that there was an issue at a distribution center for the supermarket, and food just wasn't coming into San Francisco. And so I think what we see are there's a lot of challenges and problems that are out there in the food and ag sector. And what's nice is technology can actually solve a lot of them. So I personally think the biggest change that we're going to be seeing in the coming years is the implementation of technology. And one of the things that's really good about that is technology is not developed typically for the food and ag sector. It's developed in other sectors, whether it's AI, machine learning, data analytics, automation and robotics, CRISPR, you name them. There's very few technologies developed particularly for food and ag. But what's nice is they get developed in other sectors, they get commercialized, they become ubiquitous. And then particularly on the ag side, which is slow to adopt technology, people see it in their daily life and see that it works, and they're much more willing to start using it. So I actually think one of the best things coming out of COVID is going to be the adoption of technology in ways that are going to drive efficiency. And that's going to be great in a myriad of issues, whether it's having to deal with the lack of labor to pick fruits and vegetables, or whether it's trying to change how meat processing plants work so they're more efficient and we don't run into the same issues we did this past year when they had to idle because of the COVID outbreak, and make farms work more effectively and the supply chain more effectively so we can cut food waste from 30-something% down a significant amount. So to me, those are kind of the starting point where I think a lot of real change and innovation are coming.
That's great, Adam. One thing I didn't mention is that we'd like to make this panel as interactive as possible in this sort of virtual setup. So there is a Q&A feature. So if you're an audience member out there who has something you'd like us to cover, send us a note over that Q&A feature or the chat feature, and we'll try to get to it. So Adam, that high level perspective, I mean, I think is really interesting. I mean, we've seen just a ton of acceleration of trends that may have taken 5 to 10 years to play out. And I'm wondering whether the capital in the space is, current, how they're thinking about it, and whether the deals with the companies coming to market are going to find buyers at the valuations they're looking for. Any thoughts on that?
So valuation's always a tough one. Right now, I think we all know the valuations are ridiculous for almost anything, and we all witness SPACs. I guess we haven't seen them as well in the food and ag sector as I've seen them in some of my other areas like mobility and transportation, which is, you can bring any company that has anything to do with electric vehicles right now, and it seems they can get through a SPAC at $1 billion valuation, irrespective if they have revenue or not. So valuations to me are always challenging. And this is a guy who is doing revenue IPO multiples in the early 2000s. So when I get concerned about valuation, it should be a problem. What I would say is right now, for a myriad of reasons, there's a tremendous amount of capital coming into the food and ag tech side. And whether it's a growth in ESG, impact capital, whether it's tech saying, wow, we're seeing trends in food and ag that we've seen in other end markets, the tech generalist investors saying, wait a second, there's a SaaS opportunity in food and ag tech as well. How do we approach that? There's just there's a lot of money out there. And what we're seeing right now is I find they're chasing typically more of what is the food tech side. So things that are going to the consumer. Again, to me, change is coming most rapidly through the consumer. The consumer is driving innovation. And what you're seeing as a starting point is retail and CPG really taking a lead from that perspective and driving a lot of this change. So to me, we're talking about alternative protein, which had a fantastic 2000 and 2000 will probably be its worst year ever, despite growing 400%. The total amount of protein, alternative protein is just going to continue. Indoor farming, another area you're seeing a lot. Again, to my question or comment about the distribution, the centralized distribution system's not working great. And in produce particularly, you're seeing a lot of money going into indoor farming. And then the other areas, because of carbon sequestration and because of challenges with the soil, ag biotech is another place you're seeing a lot of capital being raised. There was a deal yesterday for Anuvia, which is a sustainable fertilizer company. I think any place you bring in sustainable and ag or food technology that's going to go directly to a consumer who's asking again for fresher, healthier, more nutritious, more environmentally sustainable and tastier food, that's really at a place where the capital's coming in. The last thing I'd say, which is interesting, is while last year was a record in the amount of capital raised in ag tech and food tech, we're seeing a bifurcation in the market right now. So we're seeing a number of larger, better known, already well-capitalized companies going out and raising a tremendous amount of money. And you're seeing earlier stage companies who've been around for some time but don't have much commercial traction struggling in the market. And what I think you're going to see from that is a lot of those unable to raise capital and the beginning of consolidation in the sector.
Well, let's get our resident, VC fund guy's perspective on that. Alex, did we see the level of carnage we thought we would see? Do you think that'll play out through 2021? And from a VC perspective, are valuations for the deals you're seeing, do they continue to be sort of out of whack?
Yeah, I appreciate that. So to Adam's point, I mean, we've also seen a bifurcation and a divergence in performance. So, companies in the plant-based space, as well as direct-to-consumer business models, have really excelled in this environment. I think to Adam's earlier point, COVID's really accelerated many of these trends that had begun several years ago. And so these types of companies perform very well. Clearly, many other types of businesses that were early stage, underfunded, and particularly many business models sort of based in the restaurant space have been very badly impacted. So we're seeing, increasingly a lot of exciting opportunities in the early stage, but it's on, specific categories within the food and beverage space. And to your question on valuation, I mean, clearly there's euphoria in the public markets, pre-IPOs. I mean, just yesterday, I think it was Oatly that announced its IPO ambitions, and it's impressive. I mean, clearly it's testament to what's happening in the space, and also I think question of sort of scarcity value. I mean, when you look at sort of the DoorDashes, the Beyonds of the world, in the earlier stage, I'd say relatively speaking, we're seeing more reasonable valuations. Obviously that there's inherent risk that comes with that. But we are still seeing several pockets of opportunities where the valuations are reasonable, with one of the key exceptions, I think, still being plant-based and cell-based, where now we're seeing not just food investors, we're seeing tech investors, and a lot of liquidity going to fund these companies.
Yeah, 100%. I mean, something we're seeing in our portfolio is companies that traditionally would have taken a longer life cycle from a capital raise and build up, early exit to some of the enterprise level players and private equity shops in the space. And I'm curious, within your portfolio and with the funds with which you follow and are friendly, are you seeing early exit risk within your portfolio?
Yeah, so it's interesting because traditionally the large food and beverage companies have begun sort of outsourcing their R&D function over the past few years, and so they've been actively looking to acquire these types of business models that complement their existing already large portfolios. And if anything, we've seen kind of over the past few months that they've started to pick up the pace again of M&A activity. They're also interested in acquiring some of these opportunities earlier on, or at the very least, having visibility on these companies earlier on with, sometimes initial investments before they make sort of the full acquisition. We're now, obviously they're seeing a lot of interest in these companies from SPACs. And then, with the likes of the Beyonds and Oatly's sort of paving the way for even some of these companies to go public earlier. So I think the exit opportunities have really increased for these companies.
We've got a Q&A from our friend Michael from Blackland Capital, who's asked how much of the cook at home trend will remain after the pandemic. Any thoughts on that?
Yeah, I mean, it's interesting because we spend a lot of time, trying to figure out which of these trends are temporary and which are permanent. I think, direct to consumer grocery, which has, trebled over the past year to about 10% is one that's here to stay, sort of the convenience of ordering grocery online. But there's no doubt that, as people get vaccinated, the world opens up, people will begin, again, going to grocery stores, going to restaurants. So that's going to impact how much people cook at home. So on the margin, I would say that, that people will be cooking at home more and certainly be ordering more groceries, but we'll also see a return to restaurants and to retail.
I know we'll hear from Chad on that here in a bit. Melanie, why don't we switch to you and get your perspective as an independent sponsor? What type of deals are you seeing and wanting to do in 2021? You're on mute, Melanie. There you go.
Okay.
Nope.
Sorry. Thanks. So in 2021, we're really looking at aggregating up some of the ag biotech opportunities to help with the inefficiency of the global distribution of those ag inputs. When we look at what the big players in food and bev are doing, like PepsiCo, and when their CEO and their chief sustainability officer lead their call, you sort of need to ask yourself, wait, I thought you guys made potato chips, but actually they're talking about directly sourcing their produce from farmers who are sustainable growers. And so I think they're, as you said earlier in your opening comments, the consumer is driving much of this change to sustainability and traceability. To Adam's point earlier, we're going to see more digital technologies helping the supply chain trace whether or not those original products were grown in an organic or sustainable way. And there's a lot of pressure on the agricultural sector to answer problems like the growing population and climate change. So we're looking at distribution inefficiencies and aggregating up some of those products in the upstream of the agricultural industry. And then downstream, we're looking at some of the D2C business models and products that have come out of a result of, I guess, the trends were there, but obviously with social distance buying and consumer habits changing, desire to eat healthier, be healthier, there was a huge uptick in supplements and vitamins, and I think the wellness industry as a whole sort of actually kind of got a foothold, probably accelerated by everyone's focus on being healthy and taking vitamin C to ward off the virus. And so we think those trends will continue. And so we're looking at investing in opportunities there.
Yeah, let's focus on that for a moment, direct to consumer. I'm curious to hear from you or perhaps others as to what's the right mix for a company coming to market, looking to exit in terms of traditional retail versus direct to consumer, and is direct to consumer here to stay? Is that sustainable as the company works through its life cycle, or do we think traditional retail really is the pot at the end of the road?
I think traditional retail is still the pot at the end of the road, because you can't beat that exposure and that immediate gratification. However, with Amazon, the Amazon effect and Amazon Prime and same day, same day part delivery, that gratification desire kind of becomes a little bit more equalized in the direct to consumer model versus the retail model. And so retailers will be forced to deliver more experience to get their consumers into the store, because they're not going to be offering the convenience that the direct to consumer model offers. So you'll see mission shoppers gravitating to D2C models where they know what they want, they know the brand, or they know what they're looking for, and search optimizations and artificial intelligence will help drive those brands to high recall for that consumer. And then you'll see retail experiences sort of intertwining, not just the product, but you'll see more experiential retail consuming, because you're going to need to create something to get the consumer into the store again.
Yeah, curious to hear other thoughts on DTC. Alex, is that a channel that you're looking for maybe differently than you did last year or the year before?
Yeah, so as it happens, I mean, we've got quite a lot of exposure there, and this was the case sort of pre-COVID, and many of these business models accelerated growth throughout the COVID period, and again, we think that's here to stay, because we're seeing this as much of a permanent change in behavior. But to Melanie's point, at some point, for virtually all of these companies, retail makes sense, and that drives the next leg of growth. So what we're seeing is, companies sort of questioning at what stage do they go into retail. I mean, there's certainly companies that can go into sort of 50, 60 million, maybe 70 million run rates before having to consider retail. And we're also noticing that some of the large food and beverage companies are paying a lot of attention to these business models, given what's happened over the past year or so. Most notably, Nestle acquired Freshly, the direct-to-consumer meal company. And so I think we'll be seeing more consolidation in that space. But clearly, one of the buzzwords is omni-channel. I think for a large brand or company in the space to be successful, they need to coexist both in retail and digitally.
Yeah, we actually have a Q&A, and I think you've addressed it, which is, will there be a shakeout, which I think is really consolidation and direct-to-consumer, just like e-commerce had in the early 2000s. I mean, I think the answer is yes, and we're already starting to see it. Anybody have any additional commentary on that?
Well, I was going to say that I think you have seen some of these trends. Like you've seen stuff like Butcher Box and some of these other companies emerging with this view of having different type of specific foods going directly to the customers. And then you're seeing this in some of the worlds of sustainability as well, where you see there's people like Full Harvest and others out there who have the capabilities to bring it directly to consumers. And I think that's one of the things that we're going to see more and more of, which is how do you get this directly to the consumer, and what is it doing to really get an appeal to a consumer base that is looking for change. It's that model of, if people are focused on imperfect produce, which is now imperfect foods, of how do you get produce, how do you get things to consumers that they're looking for? And I think you're going to see more and more of that. And the other thing that's interesting is you're seeing a lot of high profile celebrities now backing some of these companies too. And I think that's going to help generate an easier path to get to the consumer base when you see 2 or 3 celebrities who are on Facebook or Instagram or somewhere else talking about these products, and you have links and you can get them rapidly, because now we all know shipping, well, assuming the mail system still works properly, which we still have questions about, but outside Amazon and other things work fine. You can get stuff into people's hands much quicker than in the past. And I think Melanie mentioned, it's almost that gratification. It's, if I get it at the supermarket, I have it now, I can take it home. And in the past, it's been I order it and it shows up in a week. Well, you know what? It could show up in 2 hours now. And I think that's going to drive a lot of additional revenue for some of these go directly to consumer businesses.
Well, I know my team in particular has probably drafted more influencer agreements the past 12 months than we have the last 5 years. So that's certainly a strategy that's being deployed. Why don't we move to Chad and get his perspective as a capital provider to the restaurant industry. You know, we're all aware, Chad, of the challenges that your sector has faced, but I'm curious as to what sort of opportunities have crystallized from your perspective coming out of the pandemic.
Yeah, well, I mean, it's a bunch of things. Obviously, it's been like a comet hitting the earth to the restaurant industry, and so, you know, in those types of environments, it creates a lot of opportunity. You know, one of the interesting things, and we were talking about, you know, the direct consumer side. You know, one of the things I think most people don't understand about restaurant is that, you know, from a share of stomach perspective, restaurant actually feeds more people than grocery in the country, and that only accelerated actually through COVID. And so, you know, share of stomach coming out of the pandemic, I think will, you know, maintain kind of at the levels of dominance, maybe even kind of accelerate. And it'll accelerate for a bunch of different reasons. So there's a bunch of collaboration going on with these direct-to-consumer type of products at the restaurant level that can get those products into the mouths of consumers faster through brands and channels that they're more familiar with and that they trust. So you're going to see more of that. A lot of the kind of survival methods that took place through COVID were, you know, creative restaurateurs who created, you know, meal kits, became a grocery store for consumers who had access to, you know, better locations or just kind of being open, drive-throughs, et cetera. And that's not really going to go away. It's not going to be as dominant as it has been for a lot of those guys, but, you know, a lot of people have found a lot of success there, and consumers really like those meal kits. And even just kind of being able to go there and buying the sausage in raw form that they loved from the restaurants that they like. So, you know, we're going to see more and more of kind of an expansion of the market, I think, you know, away from grocery or more traditional grocery, because we're just a little bit closer to the consumer. We've got, you know, the preparation, we got brands that people like, and then you can start to put products through that channel in a way I think that's really creative. You know, I think the other thing that's obvious is, you know, the comet hit the earth, and, you know, I think the estimates are that we'll lose 10 to, you know, 20 is probably the mid-range of the estimate, you know, up to 30% of restaurants that were open pre-pandemic will be closed on the back end. And so, you know, that's an obvious kind of opportunity for the restaurant space that has been traditionally concentrated. The biggest plaguing issue of the restaurants is that there are just too many doors, too many options for the customer. So great concepts still couldn't get the type of success that they should have because of all of the value that was being pushed out just from a competitive sec. That's going to change, I think, where, a lot of growth investors in the space, fell on their faces through the pandemic just because, you put the types of valuations on these restaurants that we're seeing. Your only choice is to go grow, signing up for dumb leases, signing up for bad geographies is your only option. You just really have to throw out as many as you can, hope it sticks, and then be able to sell on the back end. If you're not a growth concept, you didn't merit the valuation that you got, and you're going to fail. So, I think those guys lost some money. I think there's going to be a temptation to come back in and start pushing some of these, growth concepts again at high valuations. The one thing I'd caution there is that, the 20% of restaurants that close, number one, they were already probably not doing well pre-pandemic. So they had a smaller share of revenue or consumer going into it. So the unit count of closures is not going to correlate to the actual economics of the industry. The second thing is because of the urban shift out of some of these concentrated areas out into, smaller demographic kind of rural towns, the customer is going to be diluted a lot more than it has been historically in these concentrated areas. So, there may be more opportunity in rural expansion than previously thought. A lot of brands are really pushing hard to get there, but also the dilution of those customers is not going to create kind of a one-for-one type of a, restaurant closure, restaurant opening kind of capacity because they're just spread out over wider geography. So, people just need to really be careful about that growth opportunity. And then there's a shift back to consume, casual. I think, everyone is kind of moving away from kind of the Applebee's of the world and the dine-in type concepts. People are going to crave that coming back out to it. So I think that, concepts that, can create an experience for consumers will do well, where they may not have had that opportunity going on the back end. And the biggest one by far, and certainly for guys like me, is the need for consolidation across the restaurant industry. So, small guys did not do well. Chains did well. Large operators with real infrastructures, real technology, great brands, those are the guys that survived and even thrived through the pandemic. And so, if you're a small franchisee of a restaurant brand, you may have just gone through something pretty bad. You may not have a succession plan. You're probably thinking about selling. If you're a large one, you're definitely going to want to consolidate. Larger kind of operators, scale, infrastructure, access to resources, and technology more than anything. Those are the kind of lessons that we learned, and those are going to be the big opportunities going forward. So I see, there's already a mass consolidation going on pre-pandemic. It's just going to accelerate.
Can you comment on the labor market and what we think the Biden administration is going to focus on, as it gets, its legs going into 2021, 2022?
Yeah, I mean, just kind of big picture, the labor market, maybe counterintuitively is still very difficult. Unemployment is not as high as you'd expect it to be through a pandemic like this. And, I think that, the average unemployed person is still a little reticent. They don't necessarily want to go back to the front lines and, be out there without a vaccine. A lot of people haven't gotten it yet. But also in the markets where restaurants are back open, unemployment, in those markets is not as high as the national averages, and it's still very difficult to hire. So we saw a real problem with that coming into the pandemic. It hasn't really loosened that much, surprisingly. So it's still very difficult. So people are kind of, you got to, what you got to do, safety, wages, et cetera, scheduling. And as it relates to the regulatory environment, yeah, I mean, listen, we're expecting all sorts of change. I mean, it's absolutely the agenda. And as we've seen from the early stages, they're pushing that through the agenda, without, any real hurdles or, I guess they can do it even given some of the people who are against it. But, we're going to see kind of a Californication kind of across the industry, minimum wage for sure is happening. Even, the Republican consortium that is, trying to block or come up with an alternative is pitching $10, $11. If you're in Kentucky or, Idaho and minimum wage is kind of in the sevens, that's still a massive hit to the industry. And you got to remember, restaurant is by far the most generous in terms of revenue dollars to labor hours. So, it's by far the least efficient industry in the country, which means it's the largest employer of any industry next to the federal government. And when you have those types of swings to the restaurant industry, it really matters from a margin perspective and capabilities perspective. So that's going to happen. OSHA regulations, predictive scheduling, unionization, all of that stuff's coming out of this. All of it's clearly within the agenda, and they're going to push hard to get it all done. So you got to be prepared for it.
That's great. Well, before we run out of time, I don't know how we could have a panel on food, bev, and ag without talking about SPACs. So why are we seeing so much activity and interest in the SPAC space, and how do the environmental social initiatives really drive home that interest?
Well, I'll start off. So I would say the following, and I tell people I look at SPACs differently depending on the industry. For where I play around sustainability, including food and ag tech, I actually think SPACs are going to be a long-term play. And I say that because there's a tremendous amount of capital coming in to the world of impact and ESG, and almost all of it goes to the public market. The problem is almost all the companies are in the private market. So now you have a tremendous mismatch between capital on one side, companies on the other side. And I think you're going to see the way you put those two together is through SPACs. And you're already seeing that because you're seeing companies going public. And again, it's not hit food and ag tech, but I think that's the next area. You've seen it in mobility, who could never go public. In a traditional IPO, they don't look like a company that could be, but now they're being almost incubated by a investment consortium that people in the public markets trust, who are taking them public and saying, look, we're going to help this company and shepherd it over the next 5 years till it becomes a major company. I think the general SPAC market is, I don't want to say it's an anomaly because I think it'll continue, but it's not going to continue like it is now. I would be surprised a year after COVID is done and we're back to normal to see that there's more capital going into SPACs than there are through IPOs. And it's just not likely. I think this is a place and time that it's happening. It's going to continue, I would expect, through most, if not all, of 2021. And then I think it's going to start getting smaller and smaller, again, outside of sustainability, which has a specific reason for that. And it's, if you're involved in a SPAC, 2021 could be a fantastic year. The question is going to be, if you're a SPAC, if you're an investor who owns a SPAC post a de-SPAC process and buying a pipe, are you going to actually get any returns when you look back into the future?
Yeah, 100%. For target companies considering, the SPAC and the pipe as maybe an alternative to a traditional private financing, but what are some of the considerations there, and how should those companies be advised relative to the SPAC opportunity right now?
I tell people that, and I'm having a lot of these client conversations right now, that they need to understand what their business is and who their partner is going to be, how much capital they're going to need. Because one of the things that's a benefit for a lot of my clients is the private markets can be challenging as if you need to raise 100, 150 million every couple of years. There's just a lot more capital in the public markets. The problem is you don't want to get in a position where you're not executing and you become an orphan and you have no one following you, and then you have really very little opportunity to raise that capital, because you then need to do it in a pipe, or you need someone to take you private. It's a very challenging scenario. So I think you need to actually look with both eyes before you jump in and make sure you're well positioned for it. But right now, there's so much money into the public markets, and the Fed, I think, just said they're more or less going to continue pumping it in. So it's a challenging for me to talk to my clients and say, be very careful of doing it, when they look at the public markets and valuations and then compare it to the private market valuations and say, wait a second, I can get twice as much money at 4 times the valuation of the public markets that I can in the private markets.
Yeah, we're seeing companies run a parallel process to either put pressure on their traditional later stage venture or growth financing process to get higher valuations and on their term sheets, or vice versa. And that's such a different dynamic than pre-pandemic. So I think I agree. I mean, based on what I'm seeing, there's a lot of interest there. I think, for companies that have the management team, have existing institutional investors, I think even if they're pre-revenue, there's opportunity there. So that's different, and I think is interesting and might help propel some of the broader trends that we're seeing and help accelerate some of the progress in the sector. I want to open it up to Q&A. So if you're out there and have something you'd like us to cover that we have, please chime in. I see another one from our friend Michael at Blackland asking, and this sort of covers, I think Melanie, you covered some of this, Chad, as well, but just sort of this, if direct to consumer is a strategy that we will see on an increasing basis and help get to, as Chad, you talked about it, so some of the rural market share. How do we view that trend relative to environmental sustainability? And because there's some inherent tension between the capital wanting the ESG initiatives on the one hand, but also recognizing direct to consumer as a trend that's here to stay. How should we think about it?
Well, okay, so I think directed to consumer is definitely here to stay. In terms of the inherent conflict between sustainability and direct to consumer, I think what will end up happening is you'll see folks who feel like the products that they want are not in the rural areas are not able to hang on. Am I still on?
Yes.
Have this. Oh, okay, good. I have a message coming up. So you'll see in the rural areas, especially where you don't have a concentration of retail outlets or shops or things, and an ability to reach a consumer that maybe she's out there. Because what also happened during COVID, where people kind of looked at their lifestyles and said, wait, I can work from anywhere. I can have open space. I can go somewhere else. And some of that movement or mobility of people will also bring a direct to consumer model more to life in places where retail is not heavily concentrated, like we have in urban centers and the DMAs. I think we'll also see more online restaurants in these markets, because where you have a strong brand, you probably don't need a retail outlet that would be as large as some of the restaurants in concentrated markets where you have a heavy population of sort of upper end dine out consumers, but maybe they've chosen a different lifestyle. They want to breathe fresh air. They don't want to take an elevator down to the first floor. So you'll have some of those shifts moving together. So I don't know that the climate change or things will surpass the lifestyle decisions. I think people will think about it. You'll see sustainable packaging. You'll see it come out in different ways, not so much in terms of the carbon footprint of the delivery, but maybe in the packaging and other sustainable metrics.
Yeah, packaging and kind of the ghost kitchens, I think, again, just this collaboration between the restaurant channel and, a lot of these technology companies, that will continue. The one thing that we're not talking about, a lot of these technologies and a lot of these consumer preferences, really, when you think about the share of stomach that we were talking about before, these are fringe issues that eventually get into mainstream, but still it's fringe. I mean, if you're thinking about what drives a consumer decision today, it's value all day long. And so until you can get on the mainstream, until you can get, sustainability, and all of the other kind of nutritional and wellness and all that kind of stuff into a value proposition that's sustainable, it's fringe. It's not really mainstream. That's not to say there's not a lot of growth potential there and growth opportunity on the equity, because even a small portion of the overall food industry is massive. But guys like us are still thinking about, all right, but, can it fit on a value menu? And, we got to be thinking about that stuff really for, adoption.
100%. Lena, do we have time for one more question?
Sure, go ahead.
Okay, great. We covered this sort of earlier on, but alternative protein, synthetic, beef, poultry, et cetera, is sort of all the rage. But we have an audience member who's asked, for any comments on alternative protein and technologies behind it, from taste, nutrition, et cetera. I personally know that there's a ton of high IQ PhDs working to improve both the taste, the texture, et cetera, for the alternative meat and dairy. But curious to hear from others on that.
Yeah, so we've been spending a lot of time kind of thinking about this and trying these various products. And I think it's one of the exciting parts of the innovation that's occurring, which is not only can we create cell-based meat or plant-like alternatives, but the taste is improving. It's nowhere near where it needs to be, and sort of the good burger that many people enjoy. It still tastes quite different, but with that said, with some of the innovation that's happening with technology and some of the ingredients being used, the taste profile is improving. I would also say, one of the earlier questions as far as clean label, I mean, clearly we've seen incredible success with the likes of the Beyonds and the Impossibles that have really paved the way. So in my mind, version 2.0, version 3.0, you are going to start to see cleaner labels that are also arguably better tasting.
I was going to say, I look at it as follows, and I just actually put out a new published an article on cellular, which I said cellular meat, it's what's going to be for dinner, was my most recent one on this topic. And my general view is we're at a point where we're very early stage. And I would argue most of what's being done today is purely sustainable. And I like to give the example, or towards sustainability, that you have millennials, Gen Z going in to Burger King, ordering the Impossible Whopper, taking a picture of themselves eating it and putting it on Instagram. Why are they doing it? Well, they want to show all their friends that they're doing good for the environment. Because clearly those same people have never walked into Burger King, taken a picture of themselves eating a traditional Whopper and posted it on Instagram, because that's just gluttonous. That's just a very different perspective. So we're seeing a beginning of movement of sustainability, but I like to say, and I talk to all these companies, that the biggest challenge they face is right now, what's the label? I think it's a major issue, because it's just not in line with all these trends towards health as well. And I'd also agree with what Alex said, which is I think taste is still a problem. I think if you eat the Impossible Whopper, which is under a huge bun with cheese and special sauce and pickles, you don't taste the meat. If you take it to your grill and you cook it, you taste it and it tastes different. I personally tell people in the long term, while I believe the plant-based will take a decent sized part of the market, I actually am a believer in the cellular side over the next 20 years. I think starting with animal cells, we're likely to get to a better place of where it tastes more like meat, it feels more like meat, and I just think that's ultimately likely to be the winner. But we're still very early stage. There's a huge amount of investment and a huge amount of tech innovation that still needs to happen. But to me, there's so much momentum behind the future of protein, and we didn't even talk about bug-based protein, which I also think is an option. We're moving to a place where the protein category of all the things that are out there today could look most different 20 years from now than they do today.
Yeah, the other thing about there is you may not be comparing the nutritional value of this stuff to a hamburger. It may be to chicken. I mean, chicken was a clear winner out of the pandemic because it's just viewed as a more nutritional protein than, beef. And, so the bar is just going to continue to get higher for those alternatives as we go forward. And the consumer mind continues to be looking for healthful, high protein, low calorie, and taste.
Well, I think the screen share with the deck is sort of like music playing at the Oscars during that. So think that's a signal for us to conclude the panel. And I think each of our panelists, it's Chad, Adam, Alex, Melanie, just wonderful hearing from you. And thank you so much for your time today.
Thank you, Rick.
Sure. My pleasure. Thanks,
Short
Rick.
of turning everyone's mic off, I think that's a great analogy. Thank you guys for this discussion. I thought it was very beneficial, and I hope the audience enjoyed it as well. Thank you to our sponsors, of course, for your support, and to you all on the panel. Again, thank you. We have a lot going on in March. As you can see, this is only the webinars portion of it. We have Deal Connects, LP webinar on the 16th. We're interviewing the CEO of Houlihan Lokey on the 18th. Join us for that. It will be a great conversation. And our consumer Deal Connect is coming up on the 22nd and the 23rd. We're going to be doing 2 panels to lead into those Deal Connect meetings. So keep a lookout for more information on that. Again, thank you to everyone who joined us today, to our panelists and to our sponsors. If you are participating in the one-on-one meetings, you're going to want to log out of this link now and log into the separate link that my colleague Terrence Winters circulated yesterday. If you have any questions, reach out to the team. But we hope to see you soon. Take care, stay well, and we'll see you all soon. Thanks, everyone.